If you're buying property in Texas or other states, you might encounter something called mud tax that could add hundreds or thousands to your annual property tax bill. Let me explain what this is. MUD stands for Municipal Utility District, and MUD tax is a special assessment that many property owners don't know about until they get their first property tax bill. Today, I'm breaking down what it is and how it affects your taxes. What is a MUD? A municipal utility district is a special governmental entity created to provide infrastructure like water, sewer, drainage, and other utilities to a specific area. Think of it as a mini-government focused solely on utilities and infrastructure. Why MUDs exist? MUDs are typically created in developing areas where the existing city or county can't or won't extend utilities. Developers work with local governments to create these districts to fund the infrastructure needed for new subdivisions or commercial developments. How MUD tax works. When a MUD is created, it issues bonds to pay for building the infrastructure. MUD tax is what pays back those bonds over time. Property owners within the district pay this tax annually as part of their property tax bill. What you actually pay MUD taxes vary widely depending on the district's debt and infrastructure needs. Some might add a few $100s annually to your property taxes, while others could add several thousand. The rate depends on how much the district borrowed and how many properties share the burden. Where you'll find MUDs. MUDs are most common in Texas, but similar utility districts exist in other states. They're typically found in newer suburban developments, especially in rapidly growing areas where infrastructure needs to be built from scratch. Impact on property owners. For homeowners, MUD tax is just another line item on your property tax bill. For businesses, it's an additional operating cost you need to factor into your location decisions. The tax continues until the district's bonds are paid off, which can take 20 to 30 years or more. Tax deductibility. The good news is, MUD taxes are generally considered part of your property taxes for federal income tax purposes. This means they may be deductible subject to the state and local tax deduction limitations, currently capped at $10,000 total for state and local taxes. What to watch for? If you're buying property in a MUD, make sure your real estate agent discloses this. The MUD tax should show up in your property tax estimates during the buying process. Don't get surprised by a tax bill that's higher than expected. Research before buying. You can research MUD information through county appraisal districts or by asking the seller directly. Find out the current MUD tax rate, how much debt remains, and when the bonds are expected to be paid off. Practical advice. When evaluating property in a MUD, factor the MUD tax into your total cost of ownership. A house might seem cheaper than similar properties elsewhere, but the MUD tax could make it more expensive overall. MUD structures and tax implications can vary by state and district. This covers general concepts, but always research the specific MUD and consult with local real estate professionals for detailed information. MUD tax is one of those hidden costs that can catch property buyers off guard. If this helped you understand what to look for, hit like and subscribe for more property and tax insights that could save you money.